Hello and welcome to this month's edition of Capital Markets View. Hello, Taron, how are you?
I'm good. It looks like you're in the office today, Chris.
Yes, as you can tell, I'm sitting in a conference room in Canary Wharf. So I have been back to the office before, but this is the first time recording Capital Markets View. So next time we do this, we should coordinate. We're in the office together, and you can sit with your laptop next to me, and I'll sit. We'll do it that way.
Well, that will
Um,
be nice. That would be nice.
yeah. Would you
Um,
like to say your blurb?
yeah, I don't know if it will be possible for us to be in the office because as was recently announced, LCD will soon be divested from S&P Global. I also want to note that the activities of LCD are independent and separate from S&P Global Ratings. S&P Global Ratings maintains a separation of analytical and commercial activities.
Right, so let's dive into our first slide, which is the new leverage finance volume monthly. And I have to say, when we kind of like talked through this before, not too bad, about $500 million of activity in April compared with last year of 11. And you know what? Okay, last year we still had COVID, but now we've got COVID and the Ukrainian war and supply chain and inflation. However, the market is changing. And as you said earlier to me, there was a deal that was pulled. That hasn't happened for a while.
Yes, Opta Group paused its syndication last week. So I think although, as you said, the April volume numbers looked good, we saw a bit of a rebound. I think the narrative is changing a bit. I would
Yeah.
say conditions are getting more difficult. Just worries over the tightening monetary policy, energy disruption, supply chain issues. So when you look at loan volume year to date compared to last year, it's substantially lower. And then primary supply, as we saw last year, is getting last week is getting a bit more difficult. Also on the bond side, I think everyone was convinced there was this kind of like structurally weaker demand for credit, and then we had this big deal that was priced and oversubscribed from Ellis, and that was the first opportunistic transaction in the high yield market since February. But and so it did really well. However, there's this dislocation between favored credits like that and then sectors that are more exposed to the consumer risk. So I think there is a flight to quality that's happening.
Yeah,
And
yeah.
also I think just going back to Opta Group, I think that was structured pre-Ukraine crisis, and investors are getting more wary of structures, credit risk, and structures, not having as much tolerance for leverage. So yeah, I think that's the kind of new narrative we're seeing in the last couple of weeks.
Yeah, not talking specifically about that deal, but I am beginning to hear that some private equity firms, for a little while now, have been deliberately thinking about, and in some cases, definitely paying slightly less leverage than they did before, just being cautious. Certainly, if you look at some of the research, which will attach to this email when it goes out, there's some industries that you can really see are still triple C's as opposed to the rest of the market. So yeah, I think people are concentrating in what they know and love, like healthcare.
Hmm.
Okay, let's move to the next slide, which is weighted average bid of European loans. So it's the secondary market, it's LE, and it's kind of down, bounced up again, and then down again, which I
Yeah.
think reflects what you're saying. The general sentiment is getting a bit sticky again.
Yeah, I mean, we've gone below 95 at the end of last week for the first time since
Okay.
August 2020. This graph actually, we did this last week. We had some technical difficulties
Yes.
recording, so the data is slightly out of date by about a week with this, but it's lower now than it was in this graph. So the secondary market is
But
getting hit
if this has gone down to 95 for the whole of the LE index, obviously that means
below.
therefore there's perhaps more of a spread of pricing generally. You're getting some more ones at the lower end of pricing as well.
Yeah, this is the average.
Yeah.
This is the average.
So
So
that might mean the market's kind of widening and, some credits are really down in the 80s perhaps.
I have not looked at that specifically, so I don't know. I think I'd have to look at the numbers, look
Yeah.
at the distribution. I will be looking at that at the end of May because we
Okay.
put out the LA piece showing returns for the month. And I always look at the distribution of where the credits are trading in addition to things like the average. So that should be out at the beginning of June.
Okay. And then if we move on to our next slide, which is primary and yields. I mean, and you and I have been saying this for a while now, and now that graph really is beginning to go up. Yields are heading upwards. So we
Yeah.
are beginning to get risk and general market uncertainty being now priced in to deals that are actually happening. Prices are going up.
Yeah, I think we actually finally have enough pricing data to show this new paradigm that we've been talking about. And I just though to bring back the point that there still is a disconnect between the well-liked credits and the
Yes.
sort of new untested names.
Yes.
So again, this is an average, but yeah, we are seeing a bigger spread of pricing for credit risk, which you would expect in this
Yeah.
situation, right?
Yeah. And you know what? That kind of reflects. We were at Credit Flux a few weeks ago, and everybody was concerned about the recession, which will come. Timing, nobody's quite sure about, end of this year, beginning of next year. But is it going to be a general recession, or will it just hit certain sectors very, very hard? And then the flip side of that is sectors that people like will be able to still do deals at quote unquote reasonable pricing. Yeah, I think that's true. The next slide is CLO volumes, which dramatically down. At Credit Flux, I think the chat was mainly, will the market open up again, perhaps after Global ABS Barcelona, which is mid-June? There has been an issue. Carlisle just did something with JP Morgan at the helm. So it hasn't seized up completely, but it's really, really, really slowed down quite significantly. From memory, and I'm just going to double check. It was JP Morgan, it was Carlisle 22.3. The discounted margin on the AAAs was 120. So that's actually AAA pricing bopping up a little bit, not dramatically. You were seeing around the 115 level. Down at the bottom of the stack, the single Bs at 1.25%, the double Bs at 975. So, lower down the stack, I think it's interesting pricing down there. And then let's go to the next slide, which is CLO WACC versus term loan B spread. And the arbitrage, and is it working? I think it's difficult for some people at the moment. Depends on what's in their portfolio and how much of the old pricing they've got. And then the last slide, which is AAA coupons. Really nice scatter graph there. Bobbing around this 115, 120 mark, which is where CLOs, if they're happening, are now getting done. So do you have anything general you want to say about the market, Taron, about secondary or primary or where we're going?
Yeah, I mean, just to add to your points on the CLO market, I mean, Michael just did his weekly recap, and I think the fact that the market has been doing printing a lot of CLOs in the last couple of months, despite the higher liability costs, the dwindling value in secondary, limited primary issuance, I think it is more in a state of limbo now, and he was quoting people who are saying like this, now we're going to see how nimble the market is. There are still warehouses out there, but the
Yeah.
pace of new warehouses has cooled. So yeah, I mean, I think generally though, talking to all the journalists yesterday, next week in the UK is this big Jubilee holiday.
Yeah.
So I think we're not expecting any new deals in the next few days, really. But I think if anyone wants to get stuff done before the summer, they're going to have to come back after the long Jubilee week and try to get stuff syndicated, both bonds and loans. So I think that will be a test to see where are we on pricing, what deals can get done. But yeah, it does feel like there is a lot of nervousness now.
And then they're going to actually they have a relatively short window because, of course, traditionally Europe will start slowing down in July and August. So you
Yes.
either need to get it done in late June or possibly wait to September.
Yeah. Well, and I guess everyone really wants to go on their holidays this year now that we can go away.
Yeah, are
So,
you going away for the Jubilee?
no, actually, we were just away. We were just away at Center Parks, my first Center Parks experience.
Okay, what was it like?
Feels a little bit like the Truman Show. Like there's like a bubble over it.
Yeah,
It's nice for kids, and
yeah.
I found out on this holiday it's a Dutch concept, which
Um,
makes sense because that you have the bikes everywhere and the sort of it's very well organized. So no, it was good. But we're going to the States in the summer,
okay,
hopefully in August. So
okay.
that will be our big summer holiday. So we're not really planning to go anywhere until then. What about you? Are you going away?
Off to Marrakesh for the Jubilee holiday.
Ah,
A beginning of COVID hangover. Hangover? Holdover.
the
um,
hangover will be after the holiday.
yeah, yeah, exactly. Yeah. We were meant to go to Marrakesh at the beginning of what was the very start of COVID, but yeah, so very kindly the little Riyadh held our space over, and so now we're going to Marrakesh. So that will be quite nice. Um, um, I'm a huge monarchist, and it's fabulous. But sorry, it's a long holiday, so I'm off. The
Take
bunting
it.
is already up in our windows.
I'm sure the Queen would approve.
Right. Okay. On that note, I mean, I think just to summarize, I think what we're saying, actually, this is probably one of the most interesting times for us to be doing this because pricing is uncertain. CLOs and primary is uncertain. So it's actually quite interesting. I have to say, the credit flux panel I chaired was one of the most interesting I've done because there's change and people aren't
Hmm.
quite certain where things are going. So we'll need to really monitor the market. But other than that, to those people who are watching this from the UK, I hope you have a lovely Jubilee holiday. And to everybody else, I hope the sun shines over Europe. Thank you.